Howdy, it's lunch hour, and welcome to Finance Friday with Finance Friday Frank and a couple other folks. We're coming at you live here at Inside Production Studios in Phoenix, Arizona. And for the next 30 minutes or so, we're going to be talking about your money, building your wealth, and all those things about stocks and bonds and whatever. My name is Rob Morales from RCO Network. Good people, better business, discovering the best of you. So I'm with a ton of people. So I'm going to start announcing them now. So first guest, as always, Finance Friday Franco Ayala from the College Group. Say hello, sir. Where'd he go? Oh, did I lose him? He lost. Oh, shit. He's coming back.
Finance Friday. Finance Frank is out.
So we'll go to Satoshi Henry.
Sorry about that. Can you guys hear me?
Yeah, we can. I'm putting you back here. So hold on. Let me do that intro one more time.
Difficulties here, so pardon that, please. But yes, I'm here.
Yeah, so something coming from a Sacramento-ish area. We have Sacramento Satoshi, or my brother Henry. Hello, Henry.
Yeah. Hi. Thank you. Thanks for having me, Robert.
And then going back to Francisco Ayala from the College Group. Francisco, say hello.
Hey, how's it going, guys? I'm here. I can hear you guys. Hopefully you can hear me.
No, the crowd is going wild for you. They're waiting for yourself. And then I have a very special guest here in studio, Miss Maria Brandenburg from Great American Title. Hello, Miss Maria. Hello.
Hello, Mr. Roberto. Hello.
Yeah, there's a lot of cheering. So I had to get past all that. So we're all here to talk about your finances. So if you're watching us live here on the show, give us some comments, give some questions. We're going to answer them as we go along, but we're going to be talking about finances as usual. We have a good set of people. We have real people that are trying to figure this whole thing out. So if you're on YouTube right now, hit the little like button and subscribe. You know, why not? Because what else are you doing on a Friday at noon other than eating lunch and watching us? If you're on Facebook, like I said, leave those comments and questions. We'll get to them as we go along. Senor Francisco, you're in charge. You're the head G.
Jesus! Yeah, I don't know if you want. I don't know if you want that, but let's do it. Shoot.
Yeah. We're still coming up with a name for Maria. So she came up with Millionaire Maria.
Multi-millionaire.
Oh, and
Money Maria.
Triple M. How about that?
Money Maria. I like that one too. Because I'm money. Triple M.
Yeah, Triple M. So we got Triple M. We got Friday Frank, Triple F, Triple M, and then double S, Sacramento Satoshi.
Super.
So anyway, we're not here to talk about us. We're here to talk about money and finances. So the big thing of the week, right? Let's start about unemployment. Unemployment numbers came out today. A little bit less than expected, right? I think we hit 266, and we're expected to hit 1 million jobs. We're supposed to hit 1 million jobs in April. What happened, guys?
Yeah,
Nobody's got anything, huh? I'll put it up.
I think it basically just shows you that the economy is opening, but sometimes it's probably a little slower than what people think.
Well, I think what they're trying to do is present a good, I guess, presentation of where we're at in the economy. I don't know necessarily if it's realistic, but I think the government wants people going back to work. They just want people working and getting back to normal, right? Which also means making money and building whatever it is they're trying to build. But the significant thing is we missed the jobs number. Unemployment is increased by 0.1%. I really don't feel that's a bad thing, though. At the end of the day, we're stabilizing. We're not losing and we're not really gaining, but we're stabilizing. And I think growth in and of itself, and we've talked about this before in the show, Frank can chime in. We want steady growth. We don't want these crazy spikes in the market, because then, we're so volatile still. We're still on edge about everything. We don't want any more volatility. And I think really what the unemployment figure represents is just that stabilization and unemployment, even though it wasn't expected, stabilization there, and then stabilization and growth.
I have, I guess, two comments to make. One is that employment numbers can be very, really month to month, they don't make a lot of sense. You have one very strong month and one weak month like we did this month. What you want to look is the average, so you want to take at least a couple month average. And so it's not really this month that's concerning. If we start seeing those numbers kind of taper the next couple of months, then that's going to be a problem. So this is just could be just a blip. Now, the other thing, more importantly, though, is when bad news is good news, and that's kind of what this is the case, is that bad news in job numbers, yeah, but that means it's good news because the Fed sees this as, okay, we can still be loose on a monetary policy, we can still keep interest rates low and stuff like that, and because the economy still needs help, and the stock market likes that a lot. And so that's why, you see the market up today, and it could be probably that, but it's probably a couple of other features. But there's a lot of these instances where you see the bad news, whether it's unemployment or it's the GDP contracting or anything like that. But the market takes it as good news because that means that there's just going to be more support, more money, more stimulus, more everything. And so they take that into as a good news instead of a bad news.
Well, the thing with the stimulus, I got kind of pissed off actually this week. It was actually mixed emotions. I got a stimulus check for just over $3,000 in my bank account, and I think that's related to me being self-employed / I file as an S corp, and I'm my own employee, and so I saw a drop in there of like $3,300. And to one extent, I was elated, and I'm like, oh wow, free money. But to the other extent, it's like, well, no, I don't want this. Who else is getting this stuff? Who else is like, we want growth. They don't want money because that just devalues everything that I'm trying to do. Everything I'm trying to build is being devalued by just a free check, free money. That and that was the frustrating part with this whole thing. I do want to see growth. I like to see myself grow.
Yeah.
And I think, reflecting back, because I've done that a lot, from the beginning of this show, and not today, but like the last few years, going from and working hard and building up to this point where I have the studio now. That's taken a long time. That's taken work. That's taken a lot of in and outs and challenges and disappointments, to the point where I feel very comfortable, and it feels really good to be where I'm at. And you can't, and if somebody handed that to me, I wouldn't have understood that. I wouldn't have understood that journey. And then I wouldn't be where I'm at today, more emotionally than anything else. And when you hand out $3,000, it's like fun, cool. Like, hey, if somebody handed me this 5 years ago, I would say, hey, really cool. And I don't think I would have appreciated it or used it to the fullest extent that I could. And that's a reflection in the economy too, when you're getting continued stimulus and you don't have people working for it. And that's reflective in unemployment. When you have people not going back to work and not engaging back into the workforce, that's very frustrating because we're not building at that point. And unemployment numbers reflect that this week.
Yeah.
Well, again, I would go just to say I agree with Frank as far as the numbers, just 1 month's numbers. You don't want to look at that and generalize, but I think there's still the economy is opening, but there's still a lot of concern versus COVID. You see articles related to people, like 50% of the population, they're not going to get the vaccine, which then raises concerns. Well, is there going to be another variant, another outbreak? You see the Fed, like you saying, just sending out cash. So they're increasing liquidity. They've committed to stepping on the gas, basically. And then you see Janet Yellen this week and said, well, this might get too hot. Maybe we should think about increasing interest rates. So these are the debates that even these people are having. Is inflation going to get out of control? Are we printing too much money? Is the economy growing? Is it growing fast enough? And so these all these uncertainties, the market is a future looking, it's trying to predict what is going to happen to the future price. And so when you have all these uncertainties, that's kind of why you see the choppiness that you're seeing.
Yeah, and I got a question for Maria, actually.
Sure.
Been to the grocery store lately?
Yes, yesterday.
Yeah.
Mhm.
How are things going at the grocery store for you?
I've seen an increase in groceries and things like that, costs.
So I went to,
That's what you're asking.
I bring that up
Yeah.
because I went to Target a couple nights ago, and I went to buy Velcro, just Velcro, because I got some shit I'm putting up here. So I went to go buy Velcro, and I saw, I'm looking in the quasi Velcro section, I guess the handyman section of Target. They're really, don't go to Target. If you're gonna go to
I was
Target,
gonna say, maybe Michael's would have been a better choice for Velcro or Hobby
Hmm.
Lobby.
well, yeah, that was my point. If you're gonna go to any store, do not go to Target for hardware.
Yeah.
But anyway, what the reflective part is that I walked in there looking for the Velcro, and half that wall was just empty.
Mm.
And then all the products that were on there were very minimal. So we have not only the inflation problem, but we have supply issues
True.
too.
Yeah.
And so that's boosting prices. And so I don't, Frank, have you seen anything like that? When's the last
What's
time you
that?
bought toilet paper?
Toilet. Oh, yeah. I think the toilet paper, I don't think is an issue anymore. I think we're covered there. There are some. I guess it's both a demand, and in certain areas it's a supply issue. Housing being one of them. There's a lot of demand right now for housing, but I think the real issue with housing is the supply. There's just not enough. Other things, however,
Yeah.
it's just strictly a demand issue. Cryptocurrencies, that kind of a lot of this stuff. That's just more of a demand. It's just a spike in demand, the liquidity that's going on, people feeling rich, people having extra money. You got $3,000 extra now, and so a lot of it is demand. But there are definitely some instances where it's a supply issue as well.
If you could, I don't know if you could see that. I put shrinkflation.
Inflation.
Prices are so it's not just prices. You actually see the decrease in a toilet paper sheet. So they're cutting it back by what, a half inch and a quarter inch on one end. So you're getting smaller rolls. You're actually getting the same amount of in the package. So you get a 12 pack, 36 pack, whatever it was, but they're literally cutting the size of a toilet paper. So and that's the other aspect of inflation. It's not just prices. It's also
Well, that's
size and quantity.
That's what you were talking about when you went out to dinner. So if food prices are going up, the restaurant either has to charge you more or give you less. But I think so. This whole I think what happened, you see, look, all these pockets of inflation, and I guess I should say inflation is always a concern.
Yeah.
And that's the job of the Fed, is to keep inflation at a certain target. What you're worried about is hyperinflation. And I think during the pandemic, you'll see, like, for example, I'm taking a trip in another month or two, and I want to have a rental car.
Yeah.
Well, during the pandemic, nobody was renting cars. So all these companies consolidated, they sold off their inventory. Now you're sending everybody checks and saying, go out and travel. And that's what people are starting to do. And so when you go to rent a car, the car is no longer 200, 300 a week. It's now $1,000 for the week. And so that's the kind of inflation that you're talking about. And you see that with housing and some other things. And that's just a constraint in supply. And then with liquidity comes more demand. I think the same thing with, you had said something about lumber before.
Yeah.
People are, you see houses going up, people are building homes, people were consuming during the pandemic, doing home improvement kind of things. And now there's increased demand. So the prices increase.
Yeah. And
that's basically what inflation is.
And Mario's saying even electrical materials are going up, but I mean, just everything. And it's a crazy market, right? And talking about cars, for instance, I've never been in an environment where a used car, here, let me put this up. A used car is appreciating in value. Maybe not appreciating, but the prices are going up even for used cars. And used cars are not necessarily, they don't hold value over time.
Yeah.
And that's, again, another crazy aspect of what's going on. Mario's saying,
say something on that?
yeah, go ahead, Mario.
That kind of makes me think about our industry. Robert and I being in real estate, he's a real estate agent, me as a title rep. What we're really seeing is obviously the cost of homes rising, especially with, like you had mentioned earlier, the low inventory.
Yeah.
And it's happening, obviously it's happening nationally. I've heard from one of my girlfriends in Houston yesterday, and she said they're experiencing the exact same as us. And new builds, because of that low supply of building material, are also increasing their prices, which at one point, according to Cromford Report, new builds were less expensive than resale, and it made more sense to do that. And now we're seeing just everything. And then, of course, my comparison to the used cars, like if you get a rental, now that's up. Since nobody can afford to buy a house, which is limited in inventory, they're now renting more. And so now rental is like upwards of 2,000 in Phoenix, Arizona, which is insane because I've lived here for 25 years. And when I first moved here, you could buy a condo for like 50,000. You could buy a house for 100,000. I mean, again, 25 years ago, sign of the times and sign of the pandemic also. But it's just been
You're giving away your age, by the way.
Bunkers. 25 years ago. I didn't say how old I was 25 years ago. I was very young.
It must be like 26. But, so we're coming towards the tail end of the show.
Oh, sorry. See, who's
Already,
rambling now?
No, I ramble it. No, we have to kind of we're only supposed to be on for about 20 minutes, but we always kind of go over anyway. But in this environment, as volatile as we are, and as crazy as things are, like even Dogecoin, for instance. Henry's the more of the I'm sorry, Satoshi. Sorry. Satoshi. Satoshi's more of the expert on Dogecoin and that environment. What is there anything like regarding? Okay, so Elon Musk. This is how crazy this market is. Elon Musk is going to be on Saturday Night Live on Saturday, and I'm going to put that up there.
Right.
But so there's a big rush to purchase Dogecoin right now because the concern. I mean, Dogecoin is like trading at what, 60 cents a share right now. And so they're anticipating, hold on, let me put this up. They're anticipating that if he makes any announcement regarding Dogecoin, it could shoot up to about $1 a share, which is whatever that percentage is. Way more than necessary. But they're anticipating, and hopefully, like I said, Elon Musk is going on Saturday Night Live. So if there's any announcement of anything Dogecoin, it's going to probably shoot up to the roof. But again, it's just a marker of how volatile and how crazy this market is. And I think for Frank can probably give some insight regarding this, but this market, in any market, we don't want volatility, even in this crazy environment. I mean, there's going to be day traders who just live off this stuff. But for people who are hard pressed investors who want to like have some assurances, I guess, with their money, they want predictability, right, Frank?
Well, yes, but I mean, so for example, I don't really participate in any of the cryptocurrencies or anything like that. To me, that's obviously a lot more speculation than investing. Because what we talked about before, there's no really intrinsic value. It's just basically what other people are willing to pay for it. That's really all you're buying for. But even people like us that invest for the long term, I'm saving for my kids' college, I'm saving for retirement. I know that the stock market is risky, that it's never going to be 5% returns or 8% returns year over year over year, right? It's going to be a 20% return one year, and it's going to be a 10% return the next year, and then it's going to be a negative 20% return a couple of years. And so, yeah, in the long run, you're going to start seeing those things average out to whatever it is, 8%, 10% or something. Yeah. But even long-term investors should anticipate volatility in the stock market. And other asset classes, like the cryptocurrencies, like real estate, like bonds, like gold and stuff like that, other asset classes do affect the stock market, because once people start getting afraid and once bubbles start bursting in one asset class, it usually impacts another and another and another, and all the dominoes start tumbling down. And that's probably what we can anticipate in the future for the stock market. I mean, it's probably going to be it's going to start somewhere else, and then eventually it's going to hit the stock market. But even long-term investors should be prepared, that they're not going to get those safe, steady returns year after year after year. It's going to be ups and downs. As long as they make the right decisions, and not sell when the market is down, instead sell now, and I'm not saying get out completely, but reallocate your portfolio, rebalance your portfolio, have some cash available. So when things do start coming down, they'll have the cash to buy. That's kind of what I've been doing. I've been reallocating my portfolio so that I have some cash available, for a downturn.
Well, and then two things to that. I mean, I think Danielle had it right last week when she said that invest in ammo and water and food. I mean, ammo stock might be out there. I don't know which ammo that is. But the second thing is you're talking about asset classes, and this is what we brought up last week too, is that what asset class do you invest in when you have cash in hand, when everything is overinflated in value? I can't go buy, I can't park my money in real estate right now because I feel that the real estate market is so volatile that there could be a crash there, and if I put my extra 50, 60,000, this is the concern I have, this last year when you had so many people putting in 50, 60, probably, wiping out their 401ks, whatever, just to buy the house, that we're going to have a significant pullback. And then all those gains that they would have gained in the market are now cash heavy or cash lost in a house that may or may not increase in value over the 5 to 7 years from now. But every asset class is just overpriced right now. Like, what do you buy?
Well, so I'll give you my 2 cents. Cash is.
I want you 2 Dogecoin. Give me 2 Dogecoin. Sorry, go ahead.
Cash is an investment. Cash is an investment. And a lot of people don't see it that way because it pays hardly anything. Yeah. But when things are super expensive, I think it's a little safer bet to get 0.1% versus a pullback of 40%. Losing 10% or 20% or 40% in whatever inflated asset class you're talking about, whether it's real estate or cryptocurrencies or stock market. So treat cash as an investment. That's a strategic allocation that you can make. Again, you're not going to make much, but you're also, protecting yourself from an eventual pullback. So it's okay. Also, that's all I'm saying. It's okay to have.
I would just say that diversification is the key. Sorry to cut you off, Maria. If you
That's okay.
But I would say money is basically flowing from one place to another. Just think of it that way. And so that's where diversification comes in. So you want to look at, there's real estate, there's bonds, which you don't want to own bonds right now, I don't think. There's a stock market. And then there was other inflation. If you think inflation is going up, there's old gold, which now I think is cryptocurrency. And so if you look at the stock market, I think you can divide that into high growth tech, big tech like Facebook, Google, and then you have your reopening value type plays. So if you're diversified, so right now, high growth tech is taking a hit. So all the Cathie Woods, ARK kind of investments are taking a hit, but the cryptocurrency is in a year up like 10, 12x. So that's where diversification comes in. Yeah. And so that's how I would, if you don't know what to do, you put your money in lots of different things. And then I disagree with Frank a little bit on the cryptocurrency. I think that is a value asset. But you have to know what you're investing in. So you look at, there's basically 2 big cryptocurrencies. One is a store of value inflation hedge, which I think Bitcoin is number 1. It's the biggest, it's the most secure, it's the most decentralized, it's the most accepted, and it's the most mainstream. So if you want a store of value, you got to go with Bitcoin. And then there's what's going on with like online platform contracts, decentralized finance, NFTs, that kind of stuff. I think that will be big in the future, and that's where Ethereum is leading. If you look at Ethereum, it's up 50% over the last 2 weeks. So I'm a big buyer of Bitcoin and Ethereum, but whenever you have success like this, you're going to have people starting to look under rocks, and that's where you get these things like Dogecoin. To me, Dogecoin has no value. And that's because, and I know I'm rambling on, I'm going to try to keep it short, but
you rambled if God would have created the perfect currency, it would have scarcity. You'd be able to divide it. It would have some utility. You'd be able to transport it easily. It'd be durable and it'd be safe. And Bitcoin fills all of those things perfectly. And so Dogecoin has no utility, has no scarcity. So it's a valueless asset. And so what I would say with that is you just have to be careful, because I know somebody like, hey, I have Dogecoin. Why do you have Dogecoin? Oh, because Elon Musk is going to be on SNL this weekend. That's not something that I want to buy. Well, that goes back to the same thing Frank and I have discussed, is like behaviors and FOMO and everything that's just volatile in this market, just people jump in on. And,
right.
If there was one consistent theme that I think that Frank and I and everybody else here is that you want to take the emotion out of it and really just focusing on what a good decision regarding your finances is. And the challenge, and I think the hard part for everybody watching this show or anybody that's in finance, is you got to get through all the media bullshit. You got to get through all the craziness that people are trying to sell you on. I get Coinbase advertisements all the time on my social media, and it's just like, why?
Here, yeah.
So
you got to know what you're investing in. Oh, sorry, go ahead, Maria.
I was just saying, I'm starting to get the SMS messages too. I'm getting Instagram followers who are just like, hey, nice to meet you. I deal in cryptocurrency. And I'm like, okay, thanks for letting me know. So
you have to
being pushed any possible media out there.
Yeah.
I would just say, just be careful. A lot of people now they see Ethereum going up 50% in 2 weeks. And then, so they're buying big on this Ethereum Classic, which basically Ethereum Classic is Ethereum without the contract platforms. So it's just basically a store of value with no scarcity also. So you have to do your research, and you have to know what you're buying. Don't just buy because Ethereum is blowing up, but I can get Ethereum Classic for $100 instead of spending $3,000.
Okay, so we're coming to the end of the show. So 30 minutes just goes that quickly. And wow. So as we're wrapping up, I want to kind of get some last minute just thoughts or comments from Maria. So she's in, her camera's not working, so just bear in mind, she's just solid, but she's here. She's still here.
Oh, I was wondering why I looked like that on the screen.
Yeah. I'm trying to get her camera, but it's big. That's stupid. Okay, so Maria, if there was any takeaways or anything, advice or anything that you've come across, what would you say? And I'll go to everybody after.
I would say, I mean, I'm not a financial advisor by any stretch, but
we're not financial advisors.
I've dabbled a little bit, and I do have one, and I would say talk to your financial professional, but also do the research yourself. Don't believe the hype.
Yeah, and Frank is a financial advisor, just not on the show. Yeah. We're just entertaining. This is all entertainment. It's all having fun and talking just money and stuff. So,
but if I had advice, that would be it, because like we said, there's a lot of FOMO out there. Yeah. I got to get in on it. And it's like, no, you don't need to get in on it. You need to become informed first and find out what makes the most sense for you, because each one of us have individual needs and goals. So that would be my advice.
Awesome. And Satoshi, Sacramento Satoshi, you're up.
I guess just do your research, know what you're investing in, diversify, and hodl. Be early. It's always be in early and hodl.
All right.
And you're Frank. You're the last one.
I would, say exactly what Sacramento Satoshi was saying. Diversification, that's exactly what you want to do. Treat cash as a diversification option. Also look at international, because we're only talking about US stocks, US real estate, US bonds and stuff like that. Look at international bonds, look at international stocks. They're a lot less expensive than the US stocks. Look at international real estate. You get a bunch of ETFs, Schwab, Vanguard, Fidelity, all these places have ETFs, so you can get real cheap access to international real estate, bonds, stocks, whatever it is. So look at international too.
So as we come to the end of the show, this is Robert Morales from RCO Network. Let me get out of here. What am I doing? There we go. We're coming to the end of the show. So if there's anything you want, any questions, any comments, we'll go ahead and leave them in the comment section. I saw Claire on there. Hello, Claire. We had our show yesterday. She's having still a blast, I'm pretty sure, from the last yesterday. We should have had wine. But again, comments, questions, we'll take them and we'll answer them as we go along. Thank you for coming. Finance Friday with Frank, Satoshi, and M3. She might be part of the group now.
I'm waving.
Oh boy. So we'll catch you guys next time.
Alrighty.
Thanks, Robert.
Bye, guys. Nice meeting you.
Bye-bye.